Euro dollar. So the euro continues to chop around with the market showing no clear directional bias at the moment. Key support right now comes in at 110.87, a break below which will open the door for an acceleration to the downside towards more critical support at 108.09, the July low. At this point, only back above recent resistance at 114.67 would compromise the overall downtrend in the euro. But until then, more chopping around and waiting and seeing for a break on either end before establishing clear directional bias. Sterling dollar. So sterling remains pressured to the downside with the market breaking down since several days back in the mid-September from 156.59, trading all the way back down towards 150. At this point, key support comes in the form of 150.90, that low that we saw going back to the 4th of May, below which exposes psychological barriers at 150 further down. Really only break and close back above 153, 154 would take the immediate pressure off the downside. Dollar yen. So dollar yen has been chopping around over the past several days, pretty much since breaking down back in late August, and the market is now waiting for the next key move. At this point, though, the consolidation is classified as a bearish consolidation, with deeper setbacks favored back towards that 116.12 low that we saw on August 24th. Really only a break back above 121.74 would compromise the newly adopted bearish outlook for dollar yen. A break and close back above 121.74 would end the prospect for a medium-term lower top and put the pressure back on the top side. Euro Swiss. So Euro Swiss has been trading within a recovery structure over the past several days, and the market is now looking for fresh upside over the coming sessions above recent highs that we saw at 110.50 and towards a measured move objective of 112 further up. At this point, only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie remains confined to a broader downtrend, and although the market's seen a bit of a bounce off recent multi-year lows, any rallies continue to be well capped and should remain well capped in favor of the next downside extension below 69.08 and towards the 65 area further down. Really, initially only back above 72.80 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD has seen some sharp setbacks over the past several sessions since posting a fresh 11-year high at 134.57 and stalling shy of psychological barriers at 135. Overall, though, the uptrend remains firmly intact here, and a higher low is sought out, ideally above 130, in favor of the next upside extension and bullish continuation beyond 134.57. Kiwi dollar. So although we've seen a bit of a bounce in Kiwi over the past several sessions, the bounce is classified as corrective, with the market looking for another lower top ahead of a bearish continuation below 61.30, that spike low that we saw back in late August, and towards the 50s further down. At this point, only a breakback above 67.40 would compromise the bearish outlook. SPX 500. So the S&P 500 has enjoyed a nice rally over the past several sessions, though the market does look like it's in the process of a more meaningful structural shift, with the market putting in a potential lower top at 2022 ahead of the next major downside extension below that spike low that we saw on August 24th at 1833. At this point, only a close back above 2022 would take the pressure off the downside. Gold. So gold is looking like it's in the process of a more meaningful recovery off those multi-year lows that we saw back in July at 1073. At this point, setbacks should continue to be very well supported ahead of 1100, with a break above 1170 to confirm and open the door for an acceleration towards medium-term resistance at 1233 further up. Only a close back below 1100 would take the pressure off the top side and negate this recovery outlook for gold.